In this S&P 500 weekly technical analysis, I will tell you how the pump and dump by market movers has given a limited bullish breakout condition in the S&P 500. And even though the S&P 500 has gained and hit the 7,500 psychological mark on Friday, then also why there is no new all-time high is expected in the coming week for the S&P 500. Now, the most important day for the S&P 500 was on Wednesday, 29th of July. And on that day, the FOMC decision was released. There was another pause. And surprisingly, the press conference of the Federal Reserve Chairman was dovish. But still, the S&P 500 and the entire stock market failed. There was very heavy selling on Wednesday. And that was because of oil, which has gained more than 7% intraday, and also the market movers knew that the earnings of the giants will be positive for the stock market. This is why there was a lot of dumping on Wednesday on 29th of July. And then there was huge pump from Thursday onwards from 30th of July, and the S&P 500 from this low to this high has gained 2.7% in just 2 days. Whereas Nasdaq has gained 5% in 2 days. Now this pump that we are talking about on Thursday 30th of July and on Friday 31st of July had a valid technical reason. And that reason was the absolute saturation in the Nasdaq. Nasdaq hit the absolute saturation on Wednesday through heavy selling. And this was the absolute saturation that I'm talking about. Furthermore, Nasdaq was also trading in the oversold condition. There were these two technical conditions which were supposed to push the Nasdaq higher. And because Nasdaq is a tech index, just like the S&P 500, this means this push will be felt or will be seen in the S&P 500 also. So that was the pump and dump. Now limited bullish breakout condition. Why and how the S&P 500 has come into the limited bullish breakout condition? This is because for last 5, 6 or 7 days, S&P 500 was struggling to clear and sustain above the 7,404x level. And this was happening until Friday in the first half. And on Friday in the first 2.5 hours, the S&P 500 has given hourly closings below the 7,404x, and also there was the trend line zone. So this was now clear that S&P 500 will remain under pressure, and then there came a very heavy bullish push, and through this heavy bullish push, the S&P 500, the third hourly closing was above the 7,404x zone at 7467.18. But the question is that why the S&P 500 was pushed beyond the technicals, why the S&P 500 was manipulated. The only reason was the 7464.20, because if the S&P 500 would have remained and closed below the 7464.20, in that case S&P 500 would have gone bearish in the coming week, the week of August 3rd. And the S&P 500 then would have lost significantly and heavily to the 7,100 range. And now the S&P 500 has given a clear closing above the trend line level and also the 7,404x level. This is why it is in the limited bullish breakout condition, but not in the absolute. I will discuss the absolute bullish breakout condition in detail in the technical analysis. But before that, let me tell you that why we are not expecting an ATH. For that, the answer is found in the Dow Jones and in the Nasdaq. And both of these indices, the Dow Jones and the Nasdaq, are not supporting any heavy bullish move. However, there is one special condition that can help the S&P 500 to achieve or to gain a new all-time high level. So the special condition and the condition for the absolute bullish breakout and the condition for a bearish breakout and a heavy fall. All of that I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of August 3rd. Means from August 3rd, 2026, which is Monday, to August 7th, 2026, that will be Friday. Now guys, let me tell you that how you can navigate through this, the S&P 500 weekly technical analysis. So I have divided it into two parts. The first part is the technical part. In the technical part, I will cover the weekly chart and the daily chart, and the answer to the bullish and bearish breakout is in the daily chart. Through the technicals, I will show you this is the condition. Now, and also through this, the weekly and the daily chart, we will deduce the long-term trend and the short-term trend. The second part is the probable movement section. The probable movement section means how the S&P 500 is expected to react or to behave in the coming week, whether the bullish movement will continue. So all of the support, resistance levels, zones, all of that in this the probable movement section. And guys, it is recommended that you should watch both of these sections in order to understand how the S&P 500 and the entire US stock market is expected to behave in the next week. So guys, first I'm going to start with the technical part section. So guys, now this is the technical part section and I have divided it into the weekly and the daily chart. First I'm going to start with the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. So let's first discuss the candle. If you notice, this is the last weekly candle that was for the week of 27th of July 2026 in the S&P 500. It is a very heavy bullish candle and a bullish hammer, and the shape of the candle and a very long tail. All of this is indicating a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. Now let's get the confirmation of the same through the Dow Jones. This is the last weekly candle of the Dow Jones. It's a good bullish candle, but not a very heavy bullish candle. This candle is indicating an initial or intraday bullish movement on Monday. That's it. No gap up open or nothing like that. Okay. So now it's clear and it is confirmed through the weekly candle of the S&P 500 and the Dow Jones that there will be an initial or intraday bullish movement on Monday, and as such there is no problem, there is no fear of bearishness. But this time the picture is not complete without Nasdaq. Okay, while S&P 500 and Dow Jones manages to save themselves to coming into a heavy bearish condition, the Nasdaq was struggling heavily. It has gained 5% in 2 days, but that was still not enough. However, the candle of the Nasdaq is still indicating an initial or intraday bullish movement on Monday, right? But it is not indicating a gap up open. However, because of this pattern, the Nasdaq, the condition in the Nasdaq is indicating continuation of the bearish movement, means the tech indices will remain under pressure, will remain under bearish pressure, and we can see, if all goes well, then in the next week we can see a red weekly candle in the entire stock market. If not, then in the Nasdaq and in the S&P 500. So now the candle is clear. Now let's analyze the technical indicator to see whether the S&P 500 is still in the long-term bullish trend or not. Okay. But guys, before that, so far if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, in terms of the technicals, the S&P 500 is still holding bullish through the Bollinger Bands, moving averages, and the Ichimoku cloud on the weekly chart. And the S&P 500 is, okay, finally, once again, there is no change in the bearish MACD. MACD is still trading bearish. There was a confirmed bearish crossover in the MACD the last week, the week of July 20th, and now through this the weekly candle, the previous green, this the weekly candle, the S&P 500 has still failed to trigger the bullishness or the bullish change in the MACD. MACD is what? MACD is moving average convergence divergence. And the best part about the MACD is that MACD almost always gives a linear movement. Okay, when it went bearish, then it was bearish for around 3 or 4 months. When it turned bullish, then it was bullish for around 3 or 4 months. And now that the MACD of the S&P 500 on the weekly chart has turned bearish, okay, it is expected to remain so at least for next 3 or 4 months, until and unless there comes heavy manipulation, very extremely heavy manipulation, not the normal manipulation, extremely heavy manipulation, and S&P 500 is pushed beyond the 7,700 psychological mark, means a new all-time high level, and there comes continuous 1 or 2 or 3, okay, 1 or 2 or 3 heavy bullish weekly candles, then only there will be the force change in the MACD. Otherwise it is not possible. And so MACD of the S&P 500 is bearish, And to support that bearishness, the stochastic RSI of the S&P 500 is bearish. There is no oversold condition. Now, this is actually a blessing in disguise for whom? For the bears, not for the bulls, but for the bears. Why? Because giving this the bullish candle means the stochastic RSI is not going to hit the saturation. Not so, just forget about the absolute saturation. It is not going to hit K equal to 0 in next 1 or 2 weeks. Even if there comes very heavy fall, then also it is not going to hit that. Secondly, S&P 500 is not going to hit or going to enter into the oversold condition, just like what we have seen in the Nasdaq. It was there in the Nasdaq, but not in the S&P 500, and will not be in the S&P 500 in next 1 or 2 weeks. This means that this bullish candle has created enough room to fall in the bearish side, and this time this change is real. That is why we are now looking at the 7,000 psychological mark, because whenever there comes a failure and if the bearish slip is formed, in that case there will be the fall and then 7,000 and back into the 6,000 range. Okay, S&P 500 will be in that condition. So now it is clear that the S&P 500 on the weekly chart, or sorry, through the weekly charts is still in the long-term bullish trend. Okay, but this time the S&P 500 is only 60% bullish. The long-term bullish trend is there, 60% bullish. Okay, now comes the Dow Jones. Dow Jones is also the same. Dow Jones is bullish through the Bollinger Bands, moving averages, Ichimoku cloud on the weekly chart. And then the Dow Jones, okay, this is a plus point in the Dow Jones, because Dow Jones is still, the MACD of the Dow Jones is still bullish. Okay, and the entire stock market will come under very heavy pressure, very heavy fall when the MACD of the Dow Jones turns bearish. And if there comes very heavy fall in the coming week in the Dow Jones, very heavy fall, then the MACD in the next to next week will turn bearish. Okay, not in the next week, but in the next to next week, because this heavy fall will then create a possibility for the change in the MACD on the weekly chart. Okay, and as of now the Dow Jones is out of the overbought condition, not oversold but overbought condition. MACD, stochastic RSI is still bearish. So in this manner the Dow Jones is more bullish. The Dow Jones is 80% bullish on the weekly chart and is clearly in the long-term bullish trend. So now overall it is clear that the long-term trend is still holding, okay, but is changing. Long-term trend is still holding. S&P 500, Dow Jones, Nasdaq, they are still in the long-term bullish trend, but the long-term trend is changing. Why? Because of these technicals, the change we have seen through the MACD and the stochastic RSI, the long-term trend is changing. See, the long-term trend, the change in the long-term trend, okay, it happens or it takes somewhere like 4 to 6 weeks. And this is, I'm talking about the long-term. Okay, long-term means for 4 to 6 months, for 1 year, that change. Okay, but for the immediate change, okay, that will be on the daily chart. So before I discuss the daily chart, okay, let me also show you the consolidation here. Okay, this is very important in the S&P 500. If you notice, for last many weeks, okay, or since May, June, July, and now this is the month of August, we have seen that S&P 500 is giving very limited this kind of movement. This is what this is considered as the consolidation, that S&P 500 is consolidating here. Okay, now even though everything is not everything, but like the Middle East situation, okay, it is not good. Inflation is like that. Inflation is more than expected. Secondly, now the market participants are expecting a 25 BPS rate hike in the next meeting, that will be in the September. Okay, so market Wall Street is going to consider, okay, all of these are factors, and then the real impact on the earnings of the companies will now be seen in the next cycle. Okay, and the earnings of the third quarter, that will be released in the month of October. Okay, we will see the real impact of the war and the long-term impacts and all of that thing. Okay, however, so I was discussing this the consolidation. So consolidation means, say, if the S&P 500 manages to breach the all-time high level and sustains and gives continuous daily closings above the all-time high level, in this case the S&P 500 will come into the bullish breakout condition, and then 7,700 will not be the target, 7,800 will be the target. Okay, somewhere in the 7,800. Why? Because of the bullish breakout condition. Bullish breakout condition means at least 3% to 5% movement is seen. So it is not just about bullish breakout, but also for the bearish breakout. Okay, so wherever means to whichever side, okay, this will happen, we will see this 3% to 5% movement. Okay, especially in the indices. But if this happens in the stock, then we can see 5% to 10% movement in that direction. Okay, now let's see if there are any chances for this breakout to happen. So that will be more clear through the daily chart. So let's move on to the daily charts and to see what is going to happen in the short term technically. So guys, now we are here and this is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. Okay, let's first discuss the candle. It's a good bullish candle, but there is no defined shape of the candle. Okay, but this candle is indicating an initial or intraday bullish movement on Monday. Okay. Now comes the Dow Jones, the last daily candle of the Dow Jones. Again, it's a good bullish candle, no defined shape. Okay, this is also indicating an initial or intraday bullish movement on Monday. So now through these the candles of the Dow Jones and the S&P 500 on the daily chart, it is clear that irrespective of anything, on Monday there will be the bullishness. There will be an initial or intraday bullish movement in the entire stock market. Okay, now let's talk about the technicals, because this is where the things will be very, very interesting. Okay, things get very interesting, okay, through the technicals. But guys, before that, so far if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. And also guys, hit the hype button on YouTube to support, and your support and appreciation matters a lot. Now through the technicals, the S&P 500 is bullish through the Bollinger Bands, but is neutral through the moving averages and is bullish through the Ichimoku cloud on the daily chart. Okay, now the S&P 500 is also, it is bearish through the MACD on the daily chart, but is bullish through the stochastic RSI on the daily chart, and is heading to the bullish side saturation and the overbought condition. Okay, now the interesting, so in this manner the S&P 500 will be seen or considered as neutral. But the most important part that you will see here, okay, this is the MACD of the S&P 500. What we have seen on the weekly chart of the S&P 500, that the MACD has turned bearish on the weekly chart, is indicating a long-term change. Okay, clearly indicating a long-term change. Okay, now we are seeing that the MACD is trying to converse. This means that if there comes continuously, if there comes 2 or 3, means until Wednesday, if there comes continuous bullish candles, okay, then the MACD of the S&P 500 may turn bullish. Okay, the calculation is of the MACD is very complex, but yes, if there comes continuously bullish candles like on Monday, Tuesday and Wednesday, bullish closings, bullish candles, in that case there will be some possibility. If that does not happen by Wednesday, then by Thursday, okay, if there are 4 continuous daily closings, in that case this change will be seen in the MACD of the S&P 500. But at the same time, this bullish closing will trigger the saturation in the bull side in the S&P 500, and also the same will trigger the overbought condition in the S&P 500. Okay, this means that even before the MACD of the S&P 500 can turn bullish, S&P 500 would have already hit the overbought condition and the saturation in the bull side. Furthermore, the moving averages of the S&P 500 here, if you see, there was a confirmed bearish crossover in the moving averages on Monday on 27th of July. And the same was conveyed here, that there will be a confirmed bearish crossover because the S&P 500 is now trading and sustaining, and the hourly closings are below the 7,404x level. But now, because of this heavy bullish push, if there comes 2 continuous daily good bullish closings, okay, just like this heavy bullish candles, okay, Monday and Tuesday there comes 2 more heavy bullish candles, in that case this will change. There will be a bullish crossover. If you notice here that these moving averages, okay, these were bullish since April. Okay, there was continuous bullish, then there was this bullish slip okay, and I've confirmed that there is a bullish slip and there will be the bullish movement. It was there, then again bullish. Then after 4 months, there was a confirmed bearish crossover in the moving averages. But now the market movers are trying to change all of this again by pushing the S&P 500 up and up. Okay, so this is a pure case of manipulation. Whenever on a short period there comes the changes in the moving averages or in the MACD on the daily chart, especially see weekly chart, that is not possible, but on the daily chart, if in a short period of time there comes these the changes in the MACD, okay, and in the moving averages, then that clearly means, and that clearly shows and indicates that the market is being manipulated. Anyways, the S&P 500 is neutral on the daily chart. Now comes the Dow Jones. Well, this is where the picture is very interesting. Okay, why? Let me show you. The Dow Jones is bullish through the moving averages, Bollinger Bands and the Ichimoku cloud on the daily chart, just like it was on the weekly chart. Dow Jones is bearish. Okay, you can see here bearish MACD and you can see here bearish stochastic RSI. But the most important part in the Dow Jones is not about this thing, this technical or that technical. Most important part is the overbought condition. Dow Jones is re-entering into the overbought condition. Any kind of bullish movement or even a limited bearish movement will force the Dow Jones to enter into the overbought condition on Monday. Okay, only a good fall will help the Dow Jones to remain or to avoid getting into the overbought condition. Only a good fall. Okay, otherwise nothing. This means that overall the Dow Jones is 60% bullish on the daily chart. Okay, but the problem is that if the Dow Jones hits the overbought condition on Monday, okay, and it remains in that condition on Tuesday, the Dow Jones will automatically be in a condition to fall and there will be heavy fall. Now, what we need in the S&P 500 to see this the bullishness, okay, we need 2 consecutive heavy bullish candles, heavy bullish closings. But the overbought condition of the Dow Jones will not let that happen. And even if the S&P 500 is pushed up higher and higher just to bring this change, then the Dow Jones will have to sacrifice itself, because then the Dow Jones will be trading at the historical levels, in the means the absolute saturation, absolute overbought, and it will then create a history. Then only the S&P 500 will be in a condition to move up and to sustain and to create a new all-time high. Otherwise it will not be able to do so. And for that kind of heavy bullishness to happen every day and every day green candles, the S&P 500 must be manipulated, and it should be manipulated through these stocks like Microsoft, Apple and the chip stocks. But the only problem is that these stocks, Microsoft, Apple, Amazon and the chip stocks, they have already maxed out in the bull side. There is now limited bullish movement left in the primes of the S&P 500 and the Nasdaq. This is why the continuous bullish movement and daily green candles, technically this is not possible, but yes, with manipulation this is possible, and then through that the Dow Jones will then create the history. Now this bullish or bearish condition, okay, what will help the S&P 500 to actually move to the all-time high level or to create a new all-time high level? The bullish support and resistance levels, the bearish support and resistance levels and zones, the trend line and all of that. Now that I'm going to discuss in the next part, the next section, that is the probable movement section. But guys, before I discuss the probable movement, I have this important information to share with you, that I give these daily precise updates of the S&P 500, Dow Jones and Nasdaq every day from Monday through Friday to my Patreon community members. And that's not all, because I also give up to 100 opportunities in the premium stocks and the ETFs of the US stock market with the explicit buy and sell numbers and stop loss, etc. And that's not all, because I also give the midweek update, and it's a video technical analysis generally given every Wednesday or Thursday, and all of the precise levels, numbers and the movement is clearly discussed here. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months and years, and they are getting these daily precise updates every day from Monday through Friday, the opportunities, up to 100 opportunities in the premium stocks and the ETFs, and the midweek update video technical analysis. And they are very well aware of the movement in the stock market, support and resistance levels, reversals and everything. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And now I will give you the probable movement, means how the S&P 500 is going to behave, or is expected to behave, or is expected to move in the week of August 3rd, means from August 3rd, which is Monday, to August 7th, that will be Friday. So first thing first, next week, first of all, the earning season is now over. Okay, all of the giants have posted the earnings. There is no significant data until Friday. Only on Friday, on August 7th, the non-farm payroll data and the unemployment data will be released. That will be there. Okay. In this manner, the entire week, the week of August 3rd, is blank. So now, what we have seen through the weekly and the daily chart, that on Monday there will be an initial or intraday bullish movement, and there are some chances of the gap up open. Okay. The only problem here is that on the lower level charts, okay, the S&P 500 especially, and the Nasdaq on the lower level charts, they are now kind of overstretched. Okay, means they are hitting the absolute saturation in the bull side, hitting the overbought condition in the bull side. Okay, this means that even if there comes a gap up open or something like that, then also S&P 500 is expected to struggle here. And now the S&P 500 is aiming for the 7,500 and to enter into the 7,500 range. Okay, but now comes the problem, the real problem. This trend line on Monday will be around 7505 or 7506. This trend line, particular trend line. Okay, 7506. This means that on Monday, if the S&P 500 try to move up, okay, then it is going to struggle at the 7,500, which is the psychological mark, and the trend line, which is at the 7506. Both of these are going to create a resistance zone, 7,500/06. This is going to create a resistance zone for the S&P 500, and in order to go bullish, in order to remain bullish, S&P 500 must clear this zone, must give continuous hourly closings above this zone, especially from the first hour onwards. If it fails to do so in the first or the second hour, okay, then there will be limited chances for this to happen, means for the recovery of the 7,500 and this the zone 7,500/06. Okay, this the recovery in the second half, right? And then there will be chances, and then it will be seen that there is the rejection from the trend line. Okay, and because the Dow Jones is already, okay, the same condition you can see here, the trend line in the Dow Jones. Okay, and when the Dow Jones also try to move up, then Dow Jones will be having a potential of 0.5% to move up in the bull side. Okay, so this means that yes, the S&P 500 has chances to clear the trend line and to move above the trend line zone. Okay, why? Because of the Dow Jones, because Dow Jones is still 0.5% away, 0.5% away from its trend line. And if the Dow Jones gets a push towards its trend line, then S&P 500 will be able to clear this trend line, and then will be entering into the 7,500. And then from here, the S&P 500 can gain like 0.5% to 7,530, equivalent to the 0.5% of the Dow Jones. Okay. However, we must understand that the constituents of the Dow Jones are also the constituents of the S&P 500, but not all constituents of the S&P 500 are the constituents of the Dow Jones. So S&P 500 will move up, but little, and this bullish movement will be very limited as compared to the Dow Jones. So we will see that Dow Jones is now like 0.5% up, but the S&P 500 is like 0.1% up, or maybe like negative. Okay, so this means that irrespective of the movement in the Dow Jones, this zone in the S&P 500 itself is or will be the decisive factor for the bullishness to happen. This is the very first condition. All hourly closings must be above this zone, no matter what. Okay, now if the S&P 500 is able to clear this zone and is able to move up, then immediately comes the 751x resistance level. Okay, now you can notice that S&P 500 on Friday, it was pushed higher, okay, heavily up, and some manipulation was there, and the intraday high was 7,512. Okay, this is not my calculated level. My calculated level is beyond this, the 7,512. Okay, So this means that after clearing this, the zone 7500 and 7506, the S&P 500 is going to face heavy resistance in the 7501x at my level. Okay, there will be some chances that it can move up, okay, a little higher. But if you notice, the high of this candle formed on 22nd of July. The high was 7524.94 or approximately 7526. This was the high of this particular candle. So even if there comes a breach of the 7501x level, then the S&P 500 will face the resistance at the 7526, which is the high of the candle. Okay, that is so this is the another resistance. And if somehow or once the S&P 500 clears this resistance of the 7526, see, 7526 is not my calculated resistance. Okay, this is the high of this candle, and in order to move up, the S&P 500 has to clear and to sustain above the high of this candle. If the S&P 500 manages to do so, now comes the very heavy level, that is 754x. This is the calculated level at the 754x, and this time, okay, here let me clear this all of this. So this is a 7504x level, okay, that you are seeing. So you can see the impact of that level here, okay, clearly the impact of. So S&P 500 was struggling heavily to clear the 7504x level. It was struggling heavily to clear, okay, then 4, 5, 6 days, okay, it was struggling, okay, one day it has gained, next day it has lost. This is a very heavy level. Okay, so let's say if on Monday S&P 500 has gained this trend line, the 7500 and the 7506, okay, and somehow it has also gained the high of this candle 7526, but will remain below, okay, or within the 7504x. Fine. Let's say if there comes some more manipulation, see, first of all, because of the heaviness in the tech primes, okay, S&P 500 will struggle here to clear the 7502x, sorry, 7526, the high of this candle, okay, but with some external support, if the S&P 500 manages to do so, okay, then comes the 7504x, but will remain below the 7504x, the closing below, okay, this thing. Then on Tuesday, the S&P 500 will try to gain the 7504x, okay, again without some external help, without manipulation, okay. What that will be like, okay, some genuine cases you can say, like the Middle East conflict is over, oil is coming down, okay, or there is the ceasefire in the Middle East, okay, or there comes some comments, back-to-back comments from the president, okay. So those will be the factors, okay. If that is supported and the S&P 500 somehow manages to gain the 7504x level, there are continuous hourly closings above the 7504x level, and at the same time the Dow Jones is holding and sustaining above the trend line, okay, this particular trend line, which is somewhere around 52,800, okay. So if that kind of scenario is there, Dow Jones is holding, sustaining above this, Dow Jones is already in the overbought condition but is still holding, and the S&P 500 is now also holding above the 7504x level, then comes the 7506x level, okay, this particular level that you are seeing here, the 7506x level. S&P 500, I think only one day or 2 days it has managed to clear the level, but we knew that even though the S&P 500 has cleared the level and has given the daily closing of the level, but it is still it will struggle and will fall. It will fall below. The S&P 500 will not be able to sustain above the 7506x level. Well, that is not possible. This is why we have seen repeated fall and the failure, and this is why we are seeing the long-term change. Okay, this means that after this, the 7504x is cleared, then comes the 7506x level. Okay, and let's say even if the S&P 500 clears the 7506x level, then comes the next resistance in the 7508x. Okay, well, 7508x, this is not my level, okay, but this is actually the long trend line in the S&P 500, which is in the 7508x. Okay, technically S&P 500 is not in a condition to move to, and to make a new all-time high level. Okay, it's not just about the S&P 500 itself, but also about the Dow Jones and also about the Nasdaq. Now, if you look into the Nasdaq, this is the condition. We are seeing a very heavy, okay, fall, reversal, fall, reversal. This reversal in the Nasdaq is limited. Then eventually there will be the fall, okay, in the Nasdaq, because Nasdaq and the S&P 500 both are the tech indices and share the same, these are prime constituents, okay, and almost the same weight. Okay, this means that once the Nasdaq turns, and secondly, the Nasdaq is more bearish as compared to the S&P 500 or the Dow Jones. Only on Thursday or on Friday, if there comes continuous green candles, Nasdaq, these are moving averages on Friday, okay, may turn. There is still no 100% guarantee, but only on Friday or by Friday. In this exceptional case, the Nasdaq will turn bullish. Otherwise, it will, the moving averages will give the bullish crossover. Otherwise, it will not happen. Okay, see, this is how when we interrelate, when we check, okay, all of these three indices, we get a very clear picture what is going to happen in the S&P 500 and in the Nasdaq and also in the Dow Jones, because the indices are interconnected, are interrelated, right? This means that now the bullish side is very heavy. For now, technically chances for the new all-time high are not there. Okay, only pure manipulation can help the S&P 500 to make a new all-time high level. Otherwise, technically this is not possible, and I've shown you the reasons, all of the technical reasons. Okay, and the numbers, it starts with the 7,500, okay, 706. Then comes the 7,501x, my level, calculated level. Then comes the 7,526, the high of this candle. Then comes the 7,504x, this is my heavy calculated level. Then comes the 7,506x, another heavy calculated level. Then comes the 7,508x, this is not the level, but this is the range where the long-term trend line will be there. Okay, and long term, and it is not easy to clear and to sustain above this the long term trend line. Only when all of these hurdles are clear, then only the S&P 500 will be in a condition to move to in the 7,600 range, okay, towards the new all-time high. Okay, so this is there in the bull side. Now comes the bearish side. Okay, well, bearish side is quite interesting. Okay, and again in the bearish side, the same factors. But guys, before I discuss the bearish side, so far if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, so far if you have liked this video, then please hit like to appreciate, and also please hit the hype button on YouTube to show your support and appreciation, and your support and appreciation matters a lot. And guys, if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now the bearish side, again the same, the 7,500 and the 7,506. This zone, this small zone will define the bearish side. How it will define the bearish side? See, if the S&P 500 try to move up, okay, and struggles and fails, okay, and there are no continuous hourly closings above this zone, this means that by default S&P 500 is under pressure and is now correcting itself, and there will be limited profit booking on Monday in this manner. Okay, and S&P 500 will be coming down to these the moving averages, right? Let's say the S&P 500 has gained, okay, this the zone on Monday, but on Tuesday it has failed, then again the same condition. Okay, means this zone is what will decide the bearish side. Okay, now when the S&P 500 comes down, then the S&P 500 will get the support at the 7,407x level. Okay, this will be its immediate support, but the S&P 500 will is under obligation to come down to the 7,407x level, because on Friday the S&P 500 moved up and did not respect the 7,407x level. And after the 7,407x level, okay, now comes the most important part, that is the boundary of the Ichimoku cloud, the cluster of the moving averages, and the 7,404x level. And also if we connect, okay, and if we make this a trend line, okay, here, then also that will be there. This means that overall the picture is that this will be the very heavy, extremely heavy support to the S&P 500. Okay, what will be that? That will be the 7404x level or the entire 7404x range. Okay, the trend line will be in the 7403x, around 7439, okay, or around that, but still it will be near to the 7400, this the 4x range, not the level but the range. Okay, bull side, the moving averages, okay, they are in the 7405x range, the moving averages. In this manner, the entire, this is the range, the 7405x range, the 7404x range means from the 7440 to the 7460. The entire 20-point range is a very heavy support to the S&P 500, very heavy support. Any kind of fall will be handled here, even if there is a profit booking, and provided the profit booking is normal, not heavy, then also this will be able to hold the fall. And then from here again a bullish side movement back to this the zone, and then it will oscillate in between this the 7, okay, this the 7000, that starts from 7400, or simple, in between the 7440 and the 7500 psychological mark. Very simple. Okay, the S&P 500 will then oscillate in between these two until and unless the S&P 500 gets a clear confirmation and clear and continuous hourly closings and the daily closings either above the 7500 psychological mark or below the 7000, my level, not the 7440, but my level 7404x. Okay, if there is if the S&P 500 manages to gain the 7500 psychological mark, then the bullishness, just the bullishness, the bullish breakout condition, the bullishness. Okay, and if the S&P 500 fails and gives the continuous hourly closings and daily closings below the 7404x, this will calculated level, in that case that will be the bearish case. Okay, but the bearish case will not be realized fully until and unless the S&P 500 loses the 7400 psychological mark. Okay, the S&P 500 will have to lose the 7400 psychological mark, then only the S&P 500 will be in a condition to enter into and to sustain within the 7300 range, where it will get the support, heavy support at the 7306x level. Okay, and then it will further come down towards the 7300. Okay, and there is a level near to the 7300. Okay, the low of this candle was 7314. This was a low of the candle formed on Wednesday, heavy selling. Okay, and my calculated level, okay, near to this will create very heavy support to the S&P 500, and then the fall will be handled there. Everything in the bearish side will remain good and well, means under control, as long as the S&P 500 is not losing and is not giving continuous hourly closings and daily closings below the low of this candle, that is the 7340. Then comes the low of this candle, that is 7294. Okay, 7294 and 7314. Now the most important one here is the 7314, which is the low of the candle formed on Wednesday, 29th of July. Right? Why? Because once the S&P 500 loses the 7314 on the continuous hourly closing basis, and then on the daily closing basis, and if somehow that these closings are also below the 7300, this means that S&P 500 has accepted the failure, okay, and is now going to come down and will lose the 7294. That was the low of the candle formed on 26th of June. Okay, there will be the continuous hourly closings and the daily closings below. Then the bullish retrace will be limited to the 7,400, around the 7,400 psychological mark. Okay, once there comes a confirmed closings below the 7,300 psychological mark, then the bullish retrace will be limited to the 7,306x level. See, on this day, Wednesday 29th of July, S&P 500 came down heavily, tested the 7,306x level again and again. Okay, during the FOMC, during the press conference also lost, but we knew that this will be recovered. S&P 500 will be able to regain. Okay, it closed below the 7,306x level. Okay, on Wednesday, so it was clear that next day the 7,306x level will be regained, and next day you can see the low was 7,370. Okay, so you can clearly see S&P 500 was heavily attracted towards the 7,306x level. So, but once there comes the continuous hourly closings and daily closings below the 7,300 psychological mark, then the reversal will be limited to the 7,306x level. Okay, but this will then open the 7,100 range. Okay, so why and how it will open the 7,100 range? Well, for that you need to understand. Okay, once this support is gone, then this is the low of the candle, that is 723785 or 7238. Okay, this is the low of this candle, because once the S&P 500 has lost the 7,300, okay, and is coming into the 7,200 range. Okay, this means that there is already a bearish breakout condition in the S&P 500 through the trend line, right? Because of that bearish breakout condition, there will be very heavy pressure on the 7,238. Okay, but the S&P 500 will get the support at the 7,206x level. This level is not similar to the 7,306x level. Well, that is entirely different. Okay, this level is actually not a level, but there is a zone. Okay, around the 7,206x level there is a zone. This zone will be able to handle the fall. Okay, but because of the bearish breakout condition, this zone will not be able to handle the fall for more than one day. S&P 500 will then be thrown towards the 7,238. Once the 7,238 is lost, okay, although the S&P 500 will hesitate heavily to lose the 7,238. Okay, the low of this candle formed on 9th of June. Okay, but once this is gone, then there is nothing that can help it. The S&P 500 will be coming into the 7,100 range and finally into the 7,000 range. Okay, but in the coming week, S&P 500 is not expected to hit or to lose the 7,000 psychological mark unless something really bad happens in the world. Okay, there comes very heavy selling. Otherwise, that is not going to happen in the next week. Okay, so what does all of this means, or what does all of this indicates? Okay, all of this indicates that on Monday, okay, on Monday, the 7,500, the 7,506, which is the trend line, okay, will define the near future of the S&P 500. If there comes continuous daily closings, continuous hourly closings and daily closings above the trend line, okay, and the 7,500 psychological mark on the subsequent days also, then this means bullishness. But bullishness means heavy struggle every 15-20 points, heavy struggle either through the levels or through the zones or through the trend line or through the previous high of these candles. Okay, so there will be back to back very heavy. Okay, this the heavy resistance. And at the same time, if the S&P 500 fails to do so, fails to sustain above this the heavy zone, above the trend line, it will remain bearish, will come down to the 7,404x level, will find very heavy support. Okay, and will hesitate to lose the 7,404x, and then there will be the fall. And once the 7,404x level is gone, okay, then the S&P 500 will try to avoid the 7,400 psychological mark. Once the 7,400 psychological mark is gone, then the continuous bearishness. But guys, no matter what happens or what will happen, okay, I will keep you posted. I will keep you updated through these the daily precise updates which I give to my Patreon community members. And guys, if you have not yet joined my Patreon community, then you can join my Patreon community. So guys, once again, Please hit like if you have liked this video in order to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you have any questions that you want to ask, then please feel free to ask your question through the comment section.